Guys, do you want to come on down? So just as the panel's coming up here, we're going to get ourselves into a discussion on what's the bottom line in capital markets. Bit of a clunky title, but basically we're going to explore really where the synergies might occur in terms of new approaches. We're going to talk about some special work the guys are doing here. They're going to introduce themselves in a second and go through a little bit of a talk around what they're focused on and what their firms are doing. And, you know, we're really going to explore, has FinTech really made any difference to the capital markets? So this is an industry that's grown up with a silo-based mentality. We always bought point solutions to various silos within capital markets. Clearly, people make money from information asymmetry, so it's not always obvious that people want to cooperate. But increasingly with obviously big focus on data, the fact that a lot of data is needed across system, across function, it's calling out a new approach here as to whether there's something different that might go on. The industry continues to be quite stressed, as we know, from both increased capital regulatory burden, if you will, or its lack of scarce resources, lack of teams around that are experts, lack of data scientists, all that sort of good stuff, but lots of really good investments going into trying to make something new change. So without further ado, we're going to get into it. So I'm just going to ask the guys to go along and introduce themselves. So Lewis, off you go first.
Thank you, everyone. Hi, everyone. I'm Louis Liu, the co-founder and CEO of Eigen Technologies. We're a natural language processing machine learning company, about 4 or 5 years old now, based in London, New York, backed by Goldman Sachs and Temasek. What we fundamentally do is we actually serve about 50+% of the major GSIBs here sitting in this room and beyond, as well as major insurance companies and law firms. And what we fundamentally do is we provide a natural language processing platform where any user, so you can be a non-technical user like a front office trader or a compliance person or lawyer, and take any document that you want and then ask it any question that you want and transform that document. These could be anything from CLO prospectuses to ISA agreements to loan contracts to emails or symphony chats, and convert that into structured, usable data. We work across, from a banking perspective, front, mid, and back office. So front office, we're very active in fixed income. As you know, equity data is very good. Fixed income data tends to be sparse. So many traders actually use this to collect information on CLOs, muni bonds, things like that. Mid-office use case, one really big regulatory one. You may have heard of the qualified financial contracts, U.S. regulation that's recently come online. That involves most banks having to analyze all of their entire trading agreements. So we process that for many major banks. Back office, we process things like trade conforms and things like that. So, really sort of a broad horizontal platform that really takes on board many of the pain points across the capital markets value stream.
Hi there. My name is Peter Simon. I am the lead data scientist for financial markets at DataRobot. DataRobot is probably the world leader in automated machine learning. We go horizontally across all industries. The idea is that using DataRobot, you don't necessarily need to be an experienced data scientist to build predictive models, but we provide a very nice graphical user interface which takes you from the model building through exploring the model interpretability, documenting it, getting the model through model risk management or validation, and all the way through deployment, and the ability to do that seamlessly, leveraging a multitude of different machine learning libraries without writing a single line of code. For my part, I'm a reformed hedge fund manager. Mainly because I was a mediocre hedge fund manager. If you need someone to annualize yourselves about 4% a year, come and see me. But very good to be with you today.
I'm William Moore. I'm CEO of Phinsys for banking. Phinsys is a set of products that extracts trade data, takes that trade data, builds a risk model, a data warehouse. We'll push that trade data into financial records systems. Will support automated reg and compliance reporting, and also supports advanced data analytics. Talking about backgrounds, I have spent the majority of my career on the other side of the fence in COO and CFO roles in investment banks and actually have been a buyer of the kind of products that each of us will be talking about, and I have a pretty good understanding of some of the issues and the environment that drive those decisions.
My name is Karen Rudich. I am founder and CEO of FireDrake. What is it that we do? We help banks unlock their ambition by bridging the old with the new. So their legacy systems, really we look at a way to complement them with FinTech using a shared services platform and an orchestration layer. In terms of my background, I am the same as William for my sins. I've been in banking pretty much all of my career, doing large transformation programs, really with a single mindset of generating more revenues for the banks. So I'm one of those. Thank you.
Very good. So let's explore this a bit more. I think a lot of people would like to sort of get your views on, we won't start with the negative, but let's talk about best practice. So who's doing this well, right? Because there's a multitude of new firms around. We've been going at this FinTech thing for, well, forever, actually, if you count financial technology, but really in the last 4 or 5 years. Still plenty of barriers around, I sense, but what's good practice? Who's doing well with their approach to this stuff? I mean, Karen, maybe you can just continue, or Will.
Okay. I think I haven't come across a single bank that you could say they're doing it well all across the board. I think there are pockets of banks that are in one location or in certain teams, because they're quite siloed, that are doing it really well. And I recently came across this as an example, one of the world's biggest, largest bank, which is, followed by complexity, where they put some really great people. They complemented them with people from the outside and people from the inside, and they were able to really start addressing a lot of their internal barriers, which are more around policies and processes and legacy culture. And senior management was 100% behind them. So they were very much welcoming the challenge to status quo. They were trying to get rid of the blame culture that then drives some of the politics. And they've managed to do a fantastic transformation and integration, be able to get, speed to market, a lot of the products that are actually impacting their bottom line P&L. So I think, it is doable, it is possible, but it's then recreating this on a mass scale across, dozens of countries, across dozens of business lines and functions. That's where some of the banks will face the challenge.
Will do. Let's come down the line.
One comment I would make is I think the environment is changing right now. I recently met with the finance director of a major capital markets business, and they would describe the biggest cultural challenge they were facing right now as the change from wartime to peacetime. So as the major reg programs have started to wind down, there is now the opportunity for discretionary change the bank spend again. And that's actually a relatively new set of challenges, a position that nobody's really enjoyed for post-financial crisis.
Yeah.
One thing I wanted to pick up on what Karen was saying, you mentioned senior management buy-in, and I think this is one which this is an interesting issue we come across in our work an awful lot. Generally, what we see is there's not so much a lack of senior management buy-in. There's a lot of CEOs out there saying we have to bring AI into our business, we have to transform the way we work, we have to become data-driven, we have to become AI-driven, we have to embrace the whole FinTech opportunity. And then sort of down at the ground level, the people who are actually using these technologies are generally very engaged because they can see they can see the immediate impact it has on their daily working life and how these sort of technologies enable them to become more productive, bring more value to the business. But there's a big gap in the sort of middle layers. And it sometimes seems to me, because there's still a sort of a bit of an incentive missing there to actually do it. A bit of the old no one ever got fired for buying IBM kind of mentality to it. And I think that's a very, I think that the companies who will succeed in the space will be the ones who address that problem the best.
I would say that there are probably two things that I've seen drive a faster speed to market. I think the first is that the business owner and the technology owner are aligned. I think one of the reasons, for example, I tell my sales team, let's go after front office use cases a lot of times, like CLOs, CDOs, a lot of fixed income use cases. Mostly because if you get a head trader of some desk who really want this piece of kit that they think can make them extra money, oftentimes they will, given the personality that they tend to be, will often drive technology forward and vice versa. And so that alignment, I think sometimes is intrinsic in a bank, right? Some banks we see are much more intrinsically technology driven, and so there's a much sort of, smaller gap between technology and the business owners. I would say that the second sort of thing that I've noticed speed the time to market is banks that have a very smooth procurement process, or that there's an alignment between the business need and the procurement need. So often we find ourselves saying, yep, you get sign off for budget, you get sign off on a tech, you get sign off on business, and then you have 7 months to go through some convoluted procurement onboarding process. So I think, and that's not just for a startup, I think that's for any organization that's trying to enter the bank's ecosystem. So I think basically, I guess what I'm trying to say is technology, business, procurement, all should be singing from the same hymn sheet.
Yeah, that is for sure. Yeah. So guys, talk to them a bit more about, the value of data. I mean, this has sort of just become an easy thing. Everybody wants data. Everybody wants machine learning. Everybody wants a flavor of something, but it doesn't really add up to much, right? Unless there's a whole degree of integration behind that. So we're still in silo land, do you think, in capital markets?
So I would say yes, we're completely stuck in siloed land, and unfortunately the profitability sits right between capital markets and commercial banking as margins are being squeezed, and as banks forget to maximize the wealth of data that they have on their customers. It's not about product pushing, it's around actually changing your business model, and it should be a lot more about your client, what the client wants. Whether they're a capital markets client or a commercial banking client, you want to be able to cross-sell the products. And if you can't link the data from, across your siloed organization and your functions, then you are going to suffer. So in my view, data is king, because people focus so much on system issues, on operational problems. But when you look at how you need to get data from point A to point B to increase those revenues, to be able to service your clients, then people start focusing more on what's in the art of the possible. And what you do with that data then becomes critical to how much you grow your business, how you expand it, because that is where the information, the research, the wallet, the share of your wallet really is. And I think a lot of people forget. They get caught up in the processes and the limitations. They forget that we work in banking, right? And banking is like any business. You are there. It's okay to say that you're there to make money. It is okay to say that you want to, improve your cost-income ratio and make profitability and make profits. And this is where you really need to start embracing some of the new technologies that these guys in particular are putting to the table, because it's about making that happen inside your business organization. So,
and actually, just on this point, this was a bit of a humble pie for me when we were building up our product, right? So the whole premise of a product is really easy machine learning, right? Instead of needing 10,000 examples of a document, we need somewhere between 2 to 50 to teach our machine how to read a loan document or an ISDA agreement or what have you. Now, at first, when we first built the product, we thought, oh, that's all we need, right? This beautiful piece of machine learning kit coupled with a great UI, we're done. We're ready to go. And I think to the point around breaking down silos and process integration, over the years we realized actually, the whole layer between for a bank being able to actually use these fancy technologies in a practical way actually meant that we spent actually the last year building out a full suite of APIs. We actually have more engineers working on APIs that integrate with systems and APIs that actually try to talk between various bank systems than actually on the machine learning platform itself. And what I learned sort of the hard way, and you maybe have learned the easy way, what I've learned the hard way is actually we needed to invest in that in order to actually be usable in a bank. To be able to actually pipe the document into the ingestion engine, into the data lake. You know, and that being able to build that is you know, for us was a, you know, pretty big learning experience.
And I think things are improving. There is more integration of data. Undoubtedly, that process is not fully realized across the street. The other big issue out there is the quality of data. And you will not find anybody in the banking industry who doesn't bemoan the quality of data and systems. So it's not only integration, but it's about the cleanup. And there are huge governance issues around building data lakes, data warehouses as well, that are still partially addressed. There's a huge amount of opportunity, though, for fintechs in assisting with those issues, I think.
Yeah, I will say for fintechs in particular at the moment, you know, particularly those fintechs who are, should we say, based on providing services, providing products to the banking sector rather than those who are, say, challenging incumbents. There's a massive opportunity, particularly right now, because we find I see a lot of the big banks have spent a lot of money and the last sort of 2 to 4 years investing in building data lakes and cloud platforms and stuff like that. And these projects are sort of coming to fruition. And a lot of these guys are sitting there going, well, okay, so we've got these things now. What on earth are we going to actually do with them? How are we going to get them to generate value? So if you can answer that question in a convincing way, I think you've got a very, very good chance in a bank. And I mean, the other thing where there's a huge opportunity, and this is really sort of for the banks and how they would face the challenges, is, you know, if you're a big, old, long-established retail bank and you've got a few million customers or, you know, tens of millions of customers around the world, if you're someone like HSBC, then, you know, you're not going to be able to compete with someone like Revolut on agility, right? You know, they can out-agile you every day of the week. But in terms of the sheer volume of data that you have to build things like machine learning models with, you know, you can get a much, much better picture of people's behavior, of customers' behavior, customer spending preferences. Yes, it'll be a painful journey to get there and actually to get all the data into one place, and, you know, things like different entity concepts and entity levels and resolving these things and, you know, making the 50 different legacy databases that you've accumulated over the last 30 years talk to each other is going to be very, very painful. But, you know, the prize at the end is worth it because, you know, this is how you will compete. Yeah, you beat the fintechs at their own game, and you ultimately build better models with the much better data that you have.
Yeah, well, let's talk a little bit about the trade-offs, right? So there is naturally energy and a good implication that somebody's always got something better and newer, right? And more often than not, it's actually a better use of mature technologies, in fact. So, you know, Will mentioned the fact we might be tipping back fortuitously into a bit more of change the bank rather than just run the bank. But we know the run the bank is full of technology debt, effectively, in terms of getting off that sort of stuff. So what's the inherent tension here? Because in reality, there's value in standards, standardization of you know, what you're trying to do internally. There's a real benefit, I think, for fintechs to approach this as not a bunch of proof of concepts and then a bag of bits, but actually to be creating something coherent. So what do you see the tension as you go around with your own product and within the firms?
You mentioned proof of concept. I hate, like, being a fintech CEO, I hate that term now. Yeah. I'm sure many of you here do. I think there is, so I think in our experience, one of the challenges we have always faced from a product perspective is, do you build a completely integrated end-to-end thing that just replaces, you know, the whatever legacy system that you have, or do you make a really open API play that actually just says, okay, like, it's going to take too costly, too expensive to change the entire risk system or document repository system or regulatory system. I think our philosophy, and obviously is driven by, you know, the banks that we've seen, we've taken the view of actually saying, look, there are ways to get ROI with these kind of newer technologies in year one. And the way you do that is just to be extremely clever about the way you build your APIs and the way you integrate. And instead of going for the old school SAP style $50 million transformation project, like I think we'll settle for like $500,000, but actually delivers value and ROI today. I think there is a software architecture product point that you can sort of think through clearly, and actually hopefully get through a procurement process faster because a smaller ticket item with ROI year one. I think at least that's how we're trying to approach it.
I think one of the tensions that banks face as well is between kind of running the bank efficiently and differentiated IP. So the view that management's taking is that a lot of the banks, capital markets banks, functions are not differentiated. It's all about efficiency. It doesn't need to be better than the rest of the street. It needs to be equally good and needs to be delivered efficiently. And then there is a whole set of IP and technology that actually is differentiated IP. It's how markets business creates its value. And I think as a fintech, I think it's important to understand how these capital markets businesses are going to view you, and that should drive how you go to market and position yourself.
So I think something that you touched upon was really the technical architecture, and I think the days of like the 50 million pound big transformation, your mainframe systems needing to be replaced, et cetera, are long gone. Everyone who's tried it has known that it's just an epic fail. Now, shared services, technical architecture enables you to start complementing and splicing your old technology, look at the data that you're trying to get, what are you trying to do, and actually, as you start looking at orchestration, so things like middleware and workflow, how can you put it back into something that maybe is new, piecemeal, how can you clean it in flight? So how can you complement it with fintech services or actually new tech, not necessarily just from fintech, or RegTech, but also from existing software providers. And it's down to me, it's around a risk appetite, but also the idea of collaboration inside of a bank. It's very new. They might talk about it all the time. The idea of a platform technical architecture is also fairly new when it comes to integrating with other technologies. Again, I've never worked at a bank that didn't have lots of APIs, lots of batch download, file systems, etc. But then they refuse to collaborate with third parties because it's this cultural view of if it's not been built in-house, then the risk appetite is not there or it's too difficult to do. So I think technology will do whatever you want it to do, but it's your policies, your processes, your risk appetite, your culture inside your bank that enables you or prevents you from being successful at changing your business model. Yeah.
Yeah, I mean, not invented here, I think, is definitely still a big thing, still a big piece of resistance. And I think, certainly part of the art of bringing modern technology, modern fintech, machine learning like we do, to a big bank is the art of dealing with the IT department in a big bank. And there, I think, a fundamental piece that you have to understand is that, big bank IT, there's a lot of it about governance, there's a lot of procedures, there's a lot of things like that. But ultimately, a big bank's IT department is a cost center. Yeah, so, the pressure is on them to deliver bang for the buck, to provide a service, to provide the necessary infrastructure to the revenue generating functions. So if you can go into a bank and when you're doing a proof of concept, a proof of value, as apparently we call them now, if in the course of doing that you can demonstrate that you're going to make the IT guys' lives easier, you're going to fit in with how the governance plays, you're going to be able to hook into these things, and ultimately you're going to make it easier for them to do their job and do what they're getting paid for, which is delivering value to the revenue generators and to the operational departments, then you're in with a good chance. Then you still have to go through procurement, and 7 months is a pretty good going, by the way, in my experience. But
I think you're right. So what's the sweet spot then, right? So you could argue this industry, actually banking in particular, has not really had any productivity gain from technology rollout, and quite often people go, well, we want to be a new Amazon, et cetera, but Amazon spend a lot of money on AI on their internal processes, right? And so this is an industry that hasn't really tackled the unsexy bit. So cost-income ratios are very high. You know, there's not a lot of product innovation because of regulation. So you're down to the efficiency gains, the effectiveness of sort of doing more for less, in effect. But is it really that unsexy to say there's all this sweet spot in the middle back office to take out? Is that still a dirty place to go, or?
And can I be a little bit controversial? And I apologize if I cause offense, but actually, I think the problem is that banks are not tackling their culture, okay? It's people. It's not technology, it's not an issue of underinvestment because they're throwing billions of pounds at the problem. It's politics, guys. Anybody who's ever had to deliver something inside a bank knows that, you know, traditionally, it's been a blame culture. It's been exacerbated by all the regulatory fines in the last few years. Nobody is encouraged to put their neck out on the line and challenge policies that were written to protect the bank maybe 30 years ago, right? Because the talent management process doesn't support that. Are you going to be encouraged for, you know, challenging the CIO because is your bonus going to get impacted? It's around how people are rewarded. You mentioned this. It's around the processes. You need to change that culture if, as a bank, you're actually going to want to be able to deliver it at the core and at the foundations, and that's all down to people.
It's a funny one, you know. On the one hand, you know, I worked in banks and hedge funds for almost a quarter of a century, and I saw a lot of product innovation. Yeah, so you know, I think certainly on the actual financial product side, you know, I absolutely refute what you're saying. I mean, you know, we've managed to innovate our way into products which almost brought the global economy down a decade ago. So I think, you know, there's no question there. In terms of technological innovation, yes, it's much, much harder. And, you know, anyone who doubts that should just try doing something with any open source technology inside a big bank. Because, you know, banks are slowly glomming on to the potential in open source. And, you know, if you're lucky, the bank where you're consulting will have some sort of mechanism whereby you actually can get access to some of these open source libraries. And, you know, you won't ever, I mean, for instance, anyone here familiar with coding in Python? Yeah, so, you know, you won't ever actually get unrestricted access to the repositories where, you know, pip or conda or anything like that when you're in a bank. If you're lucky, they might mirror them, but there'll always be that extra step of governance, which, I mean, you can understand. I mean, as someone who worked in a bank once told me, you know, the reason that banks like spending a lot of money on software and don't like open source is that if you spend a lot of money on software, there's someone you can pick up the phone to and shout at if it all goes wrong.
I was going to say, banks are risk averse, but they are necessarily risk averse. I mean, the concept of risk capital didn't exist before the financial crisis, but it's a drain on returns now. So they are necessarily risk averse. I would say, though, that attitudes to innovation are changing. There's a recognition that there needs to be more innovation. The returns from capital markets businesses have not been there post-financial crisis. There's a recognition that things have to change, need to change. Technology is seen as a key driver of that change. I don't think banks right now really fully understand how to go forwards themselves. I think they are looking for help. I think it's a great opportunity for the fintech sector as a result.
Lewis, do you want to give us a last comment?
Yeah, I think my last comment is, I think you mentioned sort of, you know, what is still sexy, right? And I think there is one thing that is super sexy about banks. I think we've touched upon it here. It's scale, right? Like the fact that many of the banks we serve sit on $1 trillion balance sheets, you know, tens of millions of customers, or, you know, billions in transactions a year. You know, that data most of the data just get thrown out, but actually that data still exists somewhere. You know, we take the sliver that is textual data, but if you can find, you know, that is stuff that Amazon does not have, right? Amazon does not have this track record of scaled data of transactions over and over again. And if, you know, I know that people are like terrified of Amazon, you know, that's like a huge word these days in banking, but if you believe the future of the world is data-driven, and if you believe that whoever has the most data gives an edge, well, the banks have that. I think it is up to us as fintechs to help them, deliver on that.
Well, on that note, that's good advice. So we're completely out of time, so I'd like to thank Karen, Will, Peter, and Lewis there, and hope that was useful for you. Thank you very much.